This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. I'm Nathan Williams. Joining me today is Sam Bankman-Fried, the founder and CEO of FTX, which is a derivatives exchange for blockchain derivatives, and Alameda Research, a quantitative trading firm. Thank you so much, Sam, for joining us today.
Thanks for having me.
So these sound like very financial heavy products. Tell us about what inspired you to start Alameda Research and FTX.
Yeah, so I was doing sort of quantitative ETF trading before this at Jane Street Capital on Wall Street, and I left there in 2017 and sort of started taking a look at crypto markets. They were totally nuts, both from the sort of size of arbitrages available and from just the sort of relative immaturity of the space given how much excitement there was about it. And so it sort of seemed like, a good opportunity to jump in and start trading. And then, on the FTX side, we basically saw that there were a lot of problems with current derivatives products in crypto, and we had a lot of experience with them. And I felt like, we had an opportunity to sort of build one from the ground up and make it a pretty compelling offering.
Now, a lot of our listeners are not necessarily financial background. So tell us, what is a quantitative trading firm and what are derivatives exactly?
Yeah, so, quantitative trading firm, it sort of is a catch-all word, especially in crypto, for a lot of different things. What we mean when we say it is basically, Alameda does a combination of sort of arbitrage of, running statistical studies and using that to build models to predict prices and trading on that, liquidity providing, OTC trading, and things like that. We trade on, 30 or so platforms across the industry, trading about $1 billion a day of notional volume. So that's the Alameda side. And, then on the FTX side, it's sort of like, BitMEX or Deribit type product in that it's a, cryptocurrency exchange that has futures and perpetual swaps on a bunch of different coins.
So what is the biggest challenge to setting up something like this? I mean, I would love to set up my own system for creating derivatives or to have a computer that analyze the statistics and trade. What are the biggest challenges for preventing me from doing that?
One thing you might think is, well, I understand how a matching engine works. I understand how an order book works. I can code one of those. And did I just make Binance? Like, what makes, what is Binance if not just that? I guess it also has a wallet. So you have to like get an ETH wallet and a Bitcoin wallet, whatever. That's not that hard. And so if you want to make like an extremely bare bones exchange in crypto, it's actually like very not hard. But obviously you didn't just make $1 billion for your month long coding expedition. And so what is Binance if not just literally a matching engine plus a wallet? And, I think the answer is actually kind of interesting and complicated. One of the key things it is an amazing marketing engine. I mean, it's, this is a product which has managed to get 1 million users literally to sign up and use its service. And, I could build, Sam's cool exchange or whatever, and it's on the internet. But if there's no one there, then it's not a useful product. Someone stumbles across it. They're not going to want to use it because there are no orders, no one to trade with or against. It's just an empty order book, so they're not going to come. And so you have this sort of problem of starting it up where if you don't have anything, then no one's going to want to come in terms of volume. And on the flip side, if you can kind of get yourself to Binance's status where you have a huge number of users who are somewhat loyal to the platform, then a lot of other users are going to want to come because that's where all the trading is. That's where you can actually trade. And so the sort of core spot exchange, I think one of the big challenges in scaling it up is just, convincing users to use that platform instead of other ones. And then when you layer on a derivatives exchange, there's a bunch of complicated decisions you have to make about collateral and liquidations and expirations and funding and things like that work.
Why did you decide to jump into this world of crypto derivatives from going on Wall Street? I mean, yeah, they were going all over the place, but wasn't it a fairly big risk in order to take from a stable Wall Street income?
Oh, it's definitely a big risk. But I think it was also a big opportunity, and it was pretty exciting. I feel like there was just, an amount of upside that was sort of unparalleled. If you look at the scale of moves and arbitrages that were available, there is just the opportunity to make a whole lot of money if you sort of pulled everything off well. And sort of combined that with the fact that, I sort of wanted to try doing my own thing and learning how to build something, completely new from scratch.
With derivatives, I remember when the first Bitcoin futures came out, where people were betting whether Bitcoin would go up or down. A lot of people credited the introduction of futures with that initial falling knife sell-off of early 2018. I mean, we've seen corrections in the market before, but it just kept going down into almost a crypto winter. Do you think that derivatives really did have something to do with that?
So I think I'd actually flip that on its head a little bit. I think that some of the reason that crypto kind of, that Bitcoin ran all the way up to 20,000 in late 2017 was people anticipating the launch of the CME derivatives, the CME Bitcoin futures, and thinking that that was going to revolutionize crypto. And then sort of, they launched, and they actually launched to not very much fanfare. It was a pretty quiet trading. And, I don't know if I quite call them a dud, but they really didn't have as much activity. People thought, oh, great, Bitcoin futures are here. Now Goldman Sachs is going to come in and buy $50 billion of them tomorrow. And in fact, no, but, Goldman Sachs didn't go anywhere near them. They did not actually bring any real new institutional money in. And so because of that, I think that they sort of did not live up to the hype and their promise. And I think that that was maybe one of the initial things that, kicked off a lot of uncertainty in crypto was like, oh, wait, maybe the institutional money isn't actually coming in. So I think that was like a piece of it. But I do think it was just one piece of it. And, you saw a lot of things all kind of building on top of each other in a little bit of like a house of cards where, there's so many really leveraged bets being made on crypto at that time, so many people who are going all in that, it actually didn't take that much for a lot of that to start toppling down. And for a lot of the people who had gotten, 20x long crypto to just get wiped out on the way down and have to liquidate their whole position. And, when you start seeing that,
it's one thing after another.
Exactly. And it grew so rapidly and on such sharp margins that it just didn't take that much to have it all tumble back down.
So what do you think is the hope for institutional money? A lot of people speculate on it. A lot of people are waiting for it. It's going to be, 10, 100 times as much money as is in crypto right now. Do you think that it's on the horizon?
I think it's sort of on the edge of the horizon, maybe, but only if we play our cards right. And, the first thing that I'll say is like lots of people have pronounced before, like the institutions are coming, and that's never really seemed to quite pan out. And I think what's going on is like there's, the space is actually quite a long way away from where, most of the assets of these places are trading. Like, you go Goldman, you're like, all right, got this great trading opportunity for you to sell to your, high net worth clients. It's this like weird internet money. Probably a lot of it's scams. We can't really do compliance on it because it's anonymous. And, something like $1 billion has been stolen in the last year. And, these platforms, most of them don't have APIs. And you just start listing things and Goldman's like, no, right? Like, we can't touch that. Like, you're saying we're going to go to our clients to tell them this is how we're safeguarding their money? Like, we have a fiduciary duty here. This is like a distressed debt investment that you're telling me to get into. And so I think that like it's really a long way away from the sort of standards of, both I would say kind of compliance, but also of infrastructure that institutions are used to seeing. And so I think that, you pile on top of all of that the fact that the US regulatory environment is not good for crypto right now. And I think that like I don't think that any of these things are impossible to fix, but I do think that sort of, a thing that would go a long way would be to have like a really solid year for crypto. And I don't just mean Bitcoin goes up. I also mean like the industry kind of gets its shit together.
Yeah. Well, I mean, often when you see these Bitcoin booms, everything else sort of follows. You get more people going into development positions in crypto. You get more tools. You get more infrastructure, and it sort of brings it to the next level. Maybe we just need a couple of more of those.
Oh, I think that definitely could be. But, one thing that I will sort of caution about there is, in the last bull run, and now I think the last bull run was quite a bit weirder than some of the previous ones. But if you look at what came out of that, there's an enormous amount of work and projects that came out of it. But most of those projects weren't like the sort of marginal improvements and sort of sanitizing of the current infrastructure that you would expect from a space that was sort of becoming more stable and mature. And instead, it was like a lot of ICOs for semi-non-existent companies. Like, there was a lot of stuff coming out, but it wasn't the sort of stuff that was like going to make sure that the exchanges could reliably service US institutional customers. Instead, it was a lot of very speculative projects that all sort of completely busted when prices went back down.
Yeah. I remember being in the middle of it, seeing the type of white papers that would raise 50 to 100 million and just scratching my head.
Right.
Yeah. And
it's like, and even today, and it's gotten better, but you still see, a coin launching and you like look into it and it's got this fancy white paper. So people have gotten their shit together a little bit, but then you're like, all right, tell me about the company. And they're like, oh, well, the company hasn't launched yet. And you're like, all right, well, tell me about their roadmap. And you start looking into it, and you start feeling eventually like, no, there just isn't going to be a company. Like this company gave up on having a company a year ago, but here they are listing their token, and oh boy, that was a $200 million valuation for token related to some company or project that I actually don't really think exists except for the token itself.
Crypto has been powerful for the reason that we can print our own money. Essentially, we can create a decentralized infrastructure and essentially create an entire ecosystem and economy around it. Do you think those days are gone?
I don't think those days are gone. I think what I'd say instead is that like we've done that a lot. We've created a lot of different forms of our own money. Bitcoin was sort of revolutionary in a sense because, before that, there was nothing like it. There wasn't any of our like, this is our own money. And then you get Ethereum, which is kind of cool too, because you're like, okay, this is like Bitcoin, but also it's got this smart contract thing. That's actually pretty cool. And then you start getting like XRP and you're like, okay, well, I don't know. It's, something bank, something. And then you get XLM and you're like, I don't know. It's kind of like XRP, except I guess smaller. and then you just keep going down the list. And at this point, sort of, you see the marginal thing and you're like, yeah, it's sort of printing our own money, but we've already done that 1,000 times. And this, like, actually this new our own money is actually just like no better than in the old our own monies. And it's in fact probably quite a bit worse than some of them, in that they have, if nothing else, enormous adoption already, which is sort of a pretty big advantage for something you want other people to think is worth something. And so I think that like at this point, question you have to ask yourself if you're making a new token is like, why would anyone choose to use my new token instead of one of like Bitcoin, Ethereum, or like a stable coin?
Speaking of, what are your thoughts on Libra?
Yeah, so it's interesting. There are some things I don't really get why they designed the way they did, and they have some sort of boilerplate about it, and maybe there are some very important reasons I'm not fully grokking here. But to give a few examples, so Libra, for those who don't know, it's a Facebook's proposed new stablecoin, and one of the decisions that it makes is, most stablecoins right now, whether it's USDT, USDC, TUSD, PAX, whatever, any of these, is they're a tokenized dollar, US dollar, so you can create and redeem them one-to-one with the US dollar. Libra does not do that. It's instead a basket of global currencies. I think it's got like some dollars, some euros, some pounds, some yen, and it sounds kind of cool, like, oh man, 4 currencies in one. But I think when you actually think about using it, it's basically just worse than $1. Like, when was the last time in your life when you're like, what do I want to pay for this bagel in? Could I please pay with 50% USD, 20% GBP, 20% EUR, and 10% Japanese yen? Like, never was the last time you wanted to do that, right? And it just makes the whole thing way more complicated, right? Now think about, okay, I want to go buy a Libra token, right? with a USDC, it's clear. You send them $1, they give you your USDC. With Libra, how'd you get it? Do you have to find a way to get 4 different currencies in your bank account in order to create one? If not, are you just sending them dollars and there's some conversion happening somewhere, and what rates is it using? Right. And then you want to buy your bagel with it, and you're like, oh God, what's a Libra worth now? Like, there doesn't exist a person in the world who naturally thinks about bagels in the units of like 50% dollars, 20% euros, blah, blah, blah. And you pile on all of that, like, obviously cryptocurrency regulation is a nascent field, and it's really tough to do a lot of things in crypto the way you want to and still be compliant with only semi-existent regulation. And now you say, all right, well, sort of seems like they managed to somehow get themselves to fall under 4 different countries' jurisdictions all at once. Or 4 different economic zones, one of which has like 50 countries in it. Like, that just seems like they're going to have to deal with way more regulation than they would have otherwise had to. And for a lot of reasons, my instinct, and again, maybe they know something I don't, right? Like, they've obviously thought about this a lot more than I do, but sort of my instinct here is like, boy, it makes this product like way more complicated, and I just don't see what it buys. Like, I don't get like what upside they're going for with it.
I don't know. I've been thinking about a lot what their motivation might be, and my first thought was to try and get people away from thinking of it in terms of US dollars or yen or all of these currencies, because they would probably launch it not in the US primarily, but for places like Bangladesh, where they've got a 97% Facebook usage rate. Or in places where there might be less what's the word I'm looking for? Confidence in the local currency.
Right. Exactly. I think that's absolutely right. But even so, if you go to Bangladesh, you go to sub-Saharan Africa, and you ask them like, how much does a bagel cost? They'll either quote you their native currency, or if not, they'll quote you US dollars. Even if you're far away from America, people kind of know what a dollar is. So I still think you actually get, and in fact, if you look at what currency they're physically using, probably it's their local currency. But if it's not that, it actually very well might be dollars. Like, if you look at a lot of countries that basically don't have a functional currency, and there's just a black market, and it's always against dollars. And so even if you get outside the United States, people know what a US dollar is. People know what it's worth, how to use it. And so I agree that it's like not, it'd be crazy to do this in America. It would be crazy to have something other than the US dollar as the peg. But even globally, I think the US dollar is, it's by far and away the most understood currency.
Getting back to FTX, where are you at with the platform? Can you trade derivatives on it today?
Yep, you can. So it launched a couple months ago. It's been active. We now have about $200 million a day of volume trading on it. We had I think our first 300 million volume day today, which is pretty exciting. We have live futures on something like 15 different products, including, most of the major coins, and also a few index futures. So, in addition to being able to trade a future on Bitcoin or ETH or XRP, you can also trade a future on alt and mid, which are altcoin and mid cap coin indexes. So the kind of cool thing with those is, let's say that you want to express opinion. I think alts are going to go down today. You could just go out and short ETH, but maybe there's sort of, idiosyncratic reasons that like ETH does okay, but everything else gets hit. And really what you weren't trying to just say ETH was going down. You're trying to say in general, like I think alts were. And so, one cool thing is this lets you trade that. It lets you trade just an average of like the top 10 altcoins. So we have that as well. And then we also have leverage tokens, which are sort of cool new derivative products in crypto.
I understand you guys have a token and are going to be doing an IEO soon, correct?
That's right.
Yay! What does the token do?
Yep. So it's
should I short it?
Probably not. Should you short it? Well, you can't. But I certainly wouldn't if I were you.
Ah, good.
So I know you're shocked to hear me say that. No, I mean, it does in some sense what you'd expect. So it's an exchange token, and it gives you a discount on fees on the platform for holding it. There is a weekly buy and burn of a fraction of fees that are generated by the platform on the token. There is a buy and burn as well of a fraction of insurance fund growth, and it'll be usable as collateral on the platform. We have an attached OTC desk, and you get tighter spreads on the OTC desk if you hold it. And we'll be rolling out kind of more and more features for it as time goes on.
Great. And where can people find out more?
Yeah, so if you go to ftx.com, that's Foxtrot Tango Zulu.com or X-ray.
Whoa, X-ray. Foxtrot Tango X-ray.
Yeah. Let's get that one right. ftx.com. You can see the exchange. Feel free to play around with it with, the futures, the tokens, the OTC desk attached to it. And if you want to find out more about FTT, you can go to ftx.com/FTT-listing.
FTT being the token.
That's right. And it will give you information about when it lists and how you can buy it and how you can sort of get into a program to be ready to buy it, when it lists. It'll be listing, on July 29th on FTX and potentially on some other platforms as well, with possible announcements coming out soon about that.
Well, that's very exciting. I wish you all the best of luck. Sam Bankman-Fried is the founder and CEO of FTX and Alameda Research. Thank you so much for coming on the show.
Thanks for having me.